Today, I'm going to discuss taxes in a way that hopefully will make taxes make more sense, especially when it comes to taxing the average person versus taxing like wealthy people. When a wealthy person gets paid, they tend to get paid in mostly assets, and that keeps their income low enough that their tax bracket is reasonable for them, or else they make enough money they don't care and their income tax caps out at about 40-ish%. But in reality, they still are making way more from their asset. If you have, say, a portfolio or, your assets that you're holding, they are capped out for taxes around 15-ish%. So there's a big difference between 40-ish% and 15-ish%. The average American worker does not have a lot of assets, which means that the majority of their taxes are coming from their income that they're paying. On top of that, on average, the American average worker is also a consumer, and they consume products, and there's taxes on those products. A wealthy person buys assets and holds on to them. So they pay maybe some tax when they initially gain the asset, but after that they hold on to it long term and don't have to continuously pay a bunch of taxes. They also can afford to buy things in bulk, which means they're not paying individual tax per item that's higher because the price per item is higher, and instead they get stuff on wholesale and they don't have to pay as much money. They tend to buy clothes that only need to be bought one time for years, and they can take care of it. And the average American consumer has to buy clothes a lot because they get holey and they're poorly made and they don't last for years. Same thing with shoes, same thing with appliances, same thing with computers. A poor person is lucky if they can afford a $1,000 computer. Meanwhile, the rich person can buy a $3,000 to $5,000 computer and it's way better. They also can buy better education, and education is huge. On top of that, they can reach the caps of allowable tax reduction in a year. For instance, I talk about Roth IRAs quite a bit. You can put in $7,000 a year, and that's money that later will not have any tax on it at all. You can do price matching for your 401k. You could do a traditional IRA. Take advantage of as many loopholes as you want. Some of them, it's up to like 20,000 and something a year that they can just put into it, and it's no taxes on it. All of the growth inside of the retirement accounts doesn't get taxed. So if they realize that something's really good in their normal portfolio and they go buy it in their Roth IRA, later on in life, when they take the money out of the Roth IRA, none of that gets taxed. There are some multi-billionaires who became multi-billionaires simply by doing this, just by buying something really cheap in the Roth IRA, and then later on it's worth a lot, but they don't have to pay any tax on it. It's just free money for them. There's so little taxes, and there's so many loopholes for corporations and the rich, people who make more than even 50, 100 mil a year, that a lot of them pay either nothing in taxes or like 3% in taxes. And the average American worker is paying 40-ish% cap on their income, and then also paying taxes on products and goods, and then also not having the continuous growth of being able to hold on to a ton of assets. Assets being stock, bonds, anything that you put in the portfolio, ETFs, index funds, all of that stuff, and then also property, businesses, corporations, shares of them, and there's trusts that they can put stuff into. A lot of their profits can be put into foundations, and then the foundation grows it because foundations are allowed to do investing, and then they have an automatic in by being on the board of directors for the foundation they started, or maybe they put their kid there. A lot of them basically guarantee a well-paying job for their children by using foundations in this way. And so they can avoid taxes that the normal average person cannot avoid. There's a huge difference in almost 50% of your income going to taxes and only like 15% to 3% of your income going to taxes. And the thing is the people who are paying the least in taxes are the richest people who could afford the most in taxes. They're also the people who benefit the most from taxpayer dollars. They're the ones who get the most out of the infrastructures and the ways that the federal government actually provides for citizens, although in the United States we really don't get a lot compared to most other developed countries. But still, they get the majority of the good things out of it. The pain of paying really high taxes when you're really poor is very real. I wish for, personally, policymakers and people in legislation to change the way that taxes are. We should be taxing the things that we can get the most taxes from, which means we should be taxing assets, we should be taxing portfolios, capital gains, and we should be taxing shareholders significantly more than we are, and we should reduce the amount of taxes that there are on income. Income tax is a moot point comparatively. There's so much more that could be done to help people, to help citizens, to help the country if we just taxed the things that the rich hold on to and increase their net worth with more. Their net worth isn't being taxed. And there are some people that their only asset is their house, but I still say houses should be taxed more. There are too many rich people just holding on to vacant buildings. And we talk about in the news, oh, there's not enough houses being built. But there are enough empty buildings right now currently to house every single homeless person. Like, there's more than 650,000 homeless people in the country. And every single one of them could be housed, like, instantaneously tomorrow without building another building. There's a ridiculous amount of wealth hoarding that is possible because the regulations and the systems that we have set up just do not actually go pursuing the wealth. It just squeezes the poor people and it doesn't pursue where the money actually would come from. And the people who earn that much and have that many assets, it's not like it would affect their quality of life. They would still have all the same, day-to-day ease of life. Their children would still get to go to the best schools. They would still get to have a nice house. They would still have food in their belly, get nice clothes, have nice cars. It wouldn't change their lifestyle. So our tax systems really need to be adjusted because right now they're just ridiculously askew. It's very out of balance. There's a huge difference between somebody getting charged almost 50% of everything they earn, everything that they buy. 50% almost of their income is just going to tax. And then you have a wealthy person who pays almost nothing, who often pays less than 10% of what they earn, let alone their asset. They don't need as many products and goods and services. They don't need to consume. They've set it up to where they sell off all the liabilities to the poor person, and the poor person is in such dire, desperate straits that they buy them. It's not sustainable, and it's quite honestly not ethical.